Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about MONDELEZ International INC quarterly report. Mondelez International offers a diverse range of products and services across various categories. Some of the key businesses and services provided by the company include snack food and beverage manufacturing, biscuits and baked snacks, cookies, crackers, salted snacks, snack bars, cakes and pastries, chocolate production, Cadbury Dairy Milk, Milka, Toblerone, gum and candy products, cheese and grocery items, powdered beverages. The company serves its products to various retail outlets through multiple channels, including direct store delivery, company-owned warehouses and distribution centers, third-party distributors, e-retail platforms, retailer digital platforms, social media, and direct-to-consumer websites. The decline of Mondelez International, Inc. stock price. A confluence of factors. Mondelez International, Inc. has experienced a 12.91% drop in its stock price over the past year, with a significant decline in recent months. Several key factors have contributed to this downturn. A major contributor was the company's third quarter 2025 earnings report, which missed revenue estimates and saw a notable decline in volume/mix sales. The record-high inflation in cocoa costs also severely squeezed gross margins, leading to a 24.2% decline in adjusted EPS on a constant currency basis. The company's cautious full-year 2025 outlook, projecting a 15% decline in adjusted EPS, further dampened investor sentiment. Additionally, geopolitical, trade, and regulatory uncertainty have created an environment of volatility, impacting the company's results. These factors collectively contributed to the significant decline in Mondelez International, Inc.'s stock price over the past year. The primary drivers of revenue growth or decline can be summarized into several key factors. Revenue growth is primarily driven by higher net pricing, acquisition impact, favorable currency-related items, and organic net revenue growth. Conversely, revenue decline is attributed to unfavorable volume/mix, lapping prior year short-term distributor agreements, macroeconomic environment uncertainty, trade and regulatory uncertainty, and elevated raw material costs. In terms of segment-specific drivers, Latin America experienced a 3.1% net revenues growth in 2025, while AMEA saw an 8.9% net revenues growth in CoQ despite a -24% revenue decline in 2025. Europe also showed a 10.1% net revenues growth in CoQ with a -20% revenue decline in 2025. North America, however, experienced a -17% revenue decline in 2025 and a -0.3% net revenues growth in CoQ. Net income and profit margins decline. A summary: in recent quarters, our company has experienced a significant decline in net income and profit margins. The most notable decrease was seen in the year-to-date, YTD, 2025 compared to YTD 2024, with a drop of 37%, $1,080 million. This decline is attributed to various factors, including a higher aggregate cost environment, price volatility, labor market disruptions, elevated cocoa costs, and the failure of hedging strategies. The operating income margin decreased from 17.6% in 2024 to 9.3% in 2025, while adjusted operating income margin dropped from 18.4% to 13.7%. Segment operating income as a percentage of net revenues also declined, from 24.6% to 18.8% over 9 months, and from 19.5% to -13.2% over 3 months. These declines in profit margins are largely due to the increased costs associated with labor market disruptions and elevated cocoa prices. The failure of hedging strategies has also contributed to the decline, highlighting the need for more effective risk management practices. The company is indeed generating positive operating cash flow, as evident from the financial summary and supporting documentation on pages 5 and 60. The net cash provided by operating activities for 2024 was a substantial $3,451 million, indicating a strong ability to generate cash from its core operations. This confirms that the company's business model is financially sustainable and capable of producing positive cash flow. The company's debt level has experienced significant changes over the past year. Short-term borrowings skyrocketed from $71 million to a staggering $2,645 million, while long-term debt increased modestly from $15,664 million to $17,134 million. The total debt also rose substantially from $17.7 billion in December 2024 to $21.3 billion in September 2025. In terms of interest expenses, the company saw a notable increase from $381 million for the 9 months ended September 30, 2024, to $445 million for the same period in 2025. The One Big Beautiful Bill Act, OBBBA, legislation has also had an impact on interest expense timing, although its specific effects are not quantified. The company's financial performance varied across different regions. Europe and North America were the standout performers, with significant increases in segment operating income in both Q3 and YTD periods. In contrast, the AMEA region struggled, experiencing a decline in segment operating income in both quarters. While Europe saw a 54% increase in Q3 and 38% in YTD, North America's growth was even more impressive, with a 60% jump in Q3 and an 85% rise in YTD. The poor performance of the AMEA region highlights areas that require attention to improve overall financial health. Management's outlook on company strategy. The company aims to become a global leader in snacking through 4 strategic priorities: accelerating consumer-centric growth, driving operational excellence, creating a winning growth culture, and scaling sustainable snacking. However, management is cautious about the company's outlook due to ongoing macroeconomic volatility and uncertainty. Key drivers of this strategy include expanding growth in cakes and pastries categories through the acquisition of Everth, as well as investing in modernizing manufacturing facilities and implementing new product manufacturing. Management also expects an adequate supply of raw materials, but notes that elevated cocoa costs are expected to continue in the near and medium term due to various factors. Management is monitoring worldwide trends to secure ingredients, packaging, and fuel at cost-effective prices. Despite these efforts, they remain cautious about the company's outlook due to ongoing market and geopolitical uncertainty. The company has made several strategic moves through acquisitions and divestitures. Key acquisitions include Cliff Bar & Company in 2022, as well as a Simplify to Grow program with an unspecified company. Additionally, the company reported acquisition-related expenses of $326 million in 2024 and $247 million for the first 9 months of 2025. On the other hand, the company has also divested certain assets, including its equity method investment earnings from JDE Peet's, which were sold in the fourth quarter of 2024. The company also ended a distribution agreement with a buyer for its developed market gum business in the first quarter of 2024. Divestiture-related expenses totaled $2 million in 2024. The company has a history of rewarding its shareholders through both dividend payments and share buybacks. In recent years, the company has paid out significant amounts in dividends, with $1,842 million distributed in 2025 and $1,722 million in 2024. Additionally, the company has also engaged in share buyback programs, as evidenced by multiple pages confirming these transactions. Concerns about inventory buildup and supply chain disruption are evident in the financial summary. Inventory buildup is a potential issue due to volatility of commodity input costs, page 63, which may lead to inventory issues. Additionally, there is a risk of supply chain disruption caused by trade uncertainty and tariffs, page 30, incremental costs from war in Ukraine, page 36, and international supply chain and labor market disruptions, page 62. These factors could result in increased costs, pricing pressures, and disruption to consumer spending patterns. That concludes the financial summary for MONDELEZ International INC. Feel free to comment below, and I will be happy to answer them when possible.